All right, welcome everybody. What this video is about is fundamental analysis versus technical analysis. Now, I've been a technician my entire life, and I haven't paid a ton of attention to fundamentals to my detriment. And let me tell you what I mean. It's not fundamentals versus technicals, it's fundamentals and technicals. Now, let me tell you what I've learned here in the last, I don't know, recently, 5 years, whatever. I was always a huge technician. I was a stockbroker. I didn't have a ton of insight into how trades work. I didn't know a lot about derivatives markets. I didn't know a lot about positioning and flows. And I mean, to a degree, I did, but it was more intuitive because what I would look at was volume, and I would use those as big trades. And I knew they were big trades. I knew they were big trades, and I knew they were controlled by institutions. I just don't think I understood the magnitude of it. Now, let me tell you about technicals and fundamentals and what I have learned in the last 20 years. So, technicals are a leading indicator, so to speak. So, when I'm looking at technicals, I'm going to use oil for an example because that's why I'm making this video. Oil right now, USO, is technically very, very strong. It looks amazing. There's a lot of buying down at the low prices. You can see a lot of big orders, a lot of purchasing has occurred. As prices have risen, there isn't a lot of volume. So there's not a lot of big orders coming in. Big orders coming in after they've bought low are going to be selling. Now, I know that intuitively, but if you ask me, well, what's the timetable? How long will oil run? 5 years ago, 6 years ago, 7 years ago, I would have told you, I don't know. I can just tell you that when we see volume start to step in, we're going to know that's selling. They say, well, how do you know it's selling? 20 years of experience for one, but for two, large institutions buy low, sell high, then retail lets the price fall because they can't put the type of volume and money behind the security anymore. And then institutional money comes back in, they buy more, and then up we go. That's why the stock market looks like this, because they are constantly buying and selling, and you learn how to follow them. But as I was going through and I was looking at oil and I was putting a post up, I learned that in the little crisis that just happened between Iran and in Israel, actually what has happened is everybody pumped up their production. So there's going to be a lot more oil. The US is looking like we're going to produce more oil. So we have all this oil, and guess what? Europe is actually going to have far less of a demand than expected. And this should happen in Q3, the third quarter. So, what I know about oil is that right now it's very strong, but I'm aware of the fundamental fact that it's going to become very weak. And it looks like that should be happening around the third quarter. Now, before the news hits and says that oil's weak, what's going to happen? Institutional money, hedge funds, CTAs, banks, brokerages, they're all going to be selling oil. Volume is going to step in. So now I know when I see that volume, why? Because demand has shrunk, supply is off the rails, and they know that the price is going to fall. They're going to act on that fundamental information, but they are already aware that it's coming. So they're going to act before we know that supply has overrun demand. And technically, I know why oil has been very strong and why now it's going to be very weak. So when someone says, Derek, how do you know that oil is going to have this large volume step in and prices are going to plummet? Simple. Because I know as a world, we have overproduced and demand for oil is shrinking, at least within Europe. So when that volume identifies itself, I'll know exactly why. I'll communicate why. It also allows me to add time to my technical analysis. So I have been very, very good at telling you where prices are going to go for a very long time. The one thing I always told everyone is I can tell you where price is going to go, and I can tell you when it's beginning. I always scaled in and out of my positions, as all of you should be, because it protects you. So it never mattered if price went against me 10 or 15%. I didn't care. I was scaling in anyway. That helped me. I've always been early to the show, and I've always been early to leave. Always, my entire career. Now that I'm picking up and I'm reading more fundamental, I read fundamentals for hours every day now. I can attach time frames, which also allows me to get into derivative markets that before, for me, would have been pure gambling because I didn't have a time frame to attach to my technical analysis. That's fundamentals and technicals, baby. I hope you liked it. Fundamentals is not versus technicals, it's fundamentals and technicals. I'm excited about it. For me to see it happening and working is an amazing thing. Thank you.